And Bitcoin has that portability
Right.
that gold doesn't have, but it does come at the cost of there is this technical complexity. It's a 16-year-old network. It's 1/10 of the size. It's less understood than gold. And so there are these trade-offs between these two types of monetary assets.
The first and oldest ledger is governed by nature itself. This is gold. Nature determines how much gold is in the Earth's crust, how difficult it is to mine, and how much energy and labor it takes to refine it into a verifiable form. The ledger is updated through physical possession. If you have a gold coin, it's yours. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
You would hold both coins in this potential hard fork scenario. You would hold both coins, and if you just did nothing, you would hold both the types of coins indefinitely. And for example, if you've been holding, let's say, Bitcoin over the past 10 years in cold storage, when the Bitcoin and Bitcoin Cash hard fork happened, you now, like, let's say you had 10 Bitcoin. Now you have 10 Bitcoin and 10 Bitcoin Cash. And if you just did nothing, then fast forward 10 years to today, you'd still have 10 Bitcoin and 10 Bitcoin Cash. Now that 10 Bitcoin Cash would be worth almost nothing compared to the 10 Bitcoin, but you technically still have both, unless the Bitcoin Cash chain just gets so unpopular that it ceases function, which hasn't happened yet. But the main chain you still have. You even still have this other chain. And at some point, when you go back to check your cold storage, you could say, you know what, I don't really think I need this Bitcoin Cash anymore. For example, I'll sell it and either buy more Bitcoin or buy whatever, or you just hold it indefinitely. And so if Bitcoin were to have some sort of hypothetical hard fork in the future, with some degree of consensus behind it or some degree of kind of split community behind it, simply by holding it in cold storage, you would still have keys to both sets of Bitcoin. Effective liquidity. There's also a network effect of security. So for example, the main chain, miners on that network could potentially attack, 51% attack the weaker network, but the reverse is not true. So generally speaking, once a chain becomes the dominant one, it's very self-sustaining. And only during kind of very brief windows in time is it ever seriously challenged. Like, for example, back in the block size war, there's that kind of disagreement around store of value versus payments and who gets to decide when it changes. And the status quo won. Should quantum become a serious threat, and people disagree on how fast or in what way Bitcoin should update to it, there could be multiple different approaches, and then kind of the market chooses which one wins, which one kind of becomes or remains the leading network of liquidity and security for digital money. If for those that are not sure, you just hold the fork, you hold all coins, and then even as the dust settles, the weaker ones get reabsorbed back into whatever the main one is. It could be the one that already was, or it could be a fork that you still have coins of if you just did nothing. I would say that it's a scarce network, right? So it's not going to accept a change that makes it worse, right? So for example, you can run your own node. You get to determine what version of the network you run. And so if someone comes along and says, here's an update, it basically increases the number of coins and gives those coins to person XYZ. I would say, well, I'm not going to run that update because that just makes Bitcoin worse. And that's why anyone can propose unpopular updates and they don't get absorbed into the Bitcoin network. Only extremely popular changes, things that fix a minor bug or things that potentially increase its resilience against attacks, quantum or otherwise, could have and historically have and potentially could get absorbed into the network as useful updates. Generally, those things are only things that make it stronger. I think it's best looking at Bitcoin as a network effect communication protocol. So kind of like how Ethernet is very hard to disrupt, USB is very hard to disrupt, simple mail transfer protocol is very hard to disrupt, internet protocol is very hard to disrupt. Then you can look at social networks. I mean, people can make a million Facebook clones or a million Twitter clones, and it's very hard to displace the dominant ones at what they do. I think Bitcoin's in a similar capacity. It's a communication protocol of value. It's been the biggest for 16 years straight since it was developed. by far the biggest liquidity, by far the biggest security, basically the leading network effect in most metrics that matter. And I think that 5, 10, 15 years from now, that'll still be the case, and we'll reassess from there. And basically, it's this scarce. Basically, instead of relying on a nature to run your ledger, which is gold, and it's a useful way to do it. The other way is these big centralized ledgers, which is fiat currencies, and we've already spent this program discussing kind of the downsides of fiat currencies, all the debasement and defaults that can happen. And this other third option is a decentralized ledger.
Hmm.
And then you say, well, if this thing is valuable, and many people have said it's valuable because you can hold an asset that no single entity can just snap its fingers and shut down. Then you say, okay, well, what's the biggest one, and does it have sufficient network effects and self-sustaining security to persist? And I would say Bitcoin has reached that state. And so when you compare, say, Bitcoin and gold, they've got pros and cons. I mean, gold is this 1,000-year-old monetary asset, and it has the downsides are that it grows something like 1.5% per year indefinitely. So you get that kind of long-term debasement at a pretty gradual rate. In addition, it has portability issues. So if you're living in Lebanon and you want to take all your gold and go to another country, good luck. I mean, there's certain, especially in fiscal dominance or capital controls or things like that. There can be all sorts of frictions against moving self-custodial money. Like I said, I live part of the year in the U.S., part of the year in Egypt. It's not like I can just I'm not going to bring all my self-custody gold with me at any given
Hmm.
time. If I'm going to have access to my own money, something like Bitcoin's more useful to have this kind of geographically segregated multi-signature setup, for example.
The problem, as Lyn Alden has been highlighting for years, is that they have chosen a path of long-term debasement. They aim for positive inflation, which means they are purposely increasing the number of currency units over time, thus gradually devaluing the money you hold.
And Bitcoin has that portability
Right.
that gold doesn't have, but it does come at the cost of there is this technical complexity. It's a 16-year-old network. It's 1/10 of the size. It's less understood than gold, and so there are these trade-offs between these two types of monetary assets. Anytime we're exchanging units of divisible liquid value, there's some ledger, some entity that we're kind of relying on to determine how many of those units are there and how does it keep record of how it changes hands. And one of the original ledgers is, of course, nature. So nature determines how much gold is in Earth's crust, where it is, how much energy and labor it takes to reach that gold, how much energy it takes to refine that gold into verifiable pieces. And so basically, at any given time, no one is sure how many gold coins exist in a given region, but there is an objective answer for that, that basically governed by nature and physics, and the history of how many coins got there and were made and moved around. And the way it's updated is by physical possession, by exchanging the coin itself, or to some extent, by changing legal proxies of who owns that coin. But ultimately, it's about who actually has possession of the coin. So that's basically letting nature run a ledger of these tokens that we made out of nature's parts. The other main option in history is to use humans as a ledger, to basically say, well, this bank is the ledger. So if we both hold money at that bank, and I want to pay you, I can just tell the bank, deduct from my account, add to your account. Or the bank can issue banknotes, and I can hand you banknotes to just basically move around our units of the ledger. In a really big system like we have today, we have all these banks tie into central banks. So it comes down to one big national bank running the ledger that we use. So how many units of the dollar are there? Well, that's determined at the base level by the Fed, and at the broad level by a combination of the Fed, the government, and commercial banks. They collectively determine how many broad units are there in the system, tied into the base layer, which is basically the Fed. So we're relying on basically one group of individuals that are determining what is the kind of their lending rate for that money and how many of those units are there. And so we have to rely on them to keep it stable. And they've already kind of they choose to have a long-term debasement. They basically want to have positive inflation, so they want to have prices increase despite the fact that human productivity goes up over time. So they want to gradually increase those units, and that they're operating the ledger so they have the capacity to do that. And then the third option is to say, well, instead of letting nature run it, and instead of letting just one entity or one council run it, there's a way now to run ledgers in a more distributed way. And it's more like a super large federation, you can think of it, or in a more distributed sense, it's potentially tens of thousands of entities participating in a ledger, and it comes with governing logic that is purposely very hard to update. So it's not that it can't update, but that updates can only be chosen by the network. No one can send out an update to all nodes. Nodes have to choose to say, I'm going to accept this update, and it's open source so people can audit it. And then they have this kind of ledger that they're operating together. And then if it's a proof of work network like Bitcoin, there's also an energy component into basically how that ledger is maintained. But basically, it's just this third option for running a ledger. So at the end of the day, money is kind of this divisible thing, this divisible liquid thing that we're moving around. And then just the main question becomes, who controls how many units there are, and what's the recording authority that determines who owns it?
Right. But money is just a representation of our time, our energy, and our effort that we can exchange with somebody else for something that, we may want from them. And the ledger analogy really resonates there. Very quickly, Lyn, can you give me a Bitcoin forecast for a year's time and 5 years' time, and a gold forecast for a year and 5 years?
A year, these things are very variable. I would expect to hopefully see Bitcoin over 150,000 in the next year. I'm not sure that's going to happen, but that would be my base case. Gold, I would like to see us touch 3,800, maybe 4,000 in that time. I wouldn't be surprised if it takes a little longer. When we look out 5 years, Bitcoin is very volatile, so I wouldn't be surprised if it, say, touched 250,000 or even multiple hundred thousands, and then corrected back down by some significant degree. But I think if we don't see 250,000 in 5 years, that'd be kind of disappointing, and potentially higher. For gold, in a 5-year time frame, I think of 4,000, 5,000, potentially much higher, becomes reasonable over those time frames. I'm always hesitant because there's information that could happen 6 months or a year from now that makes me change, but that's kind of the general trend that I would look at the current time. Maybe we'll look back and it's foolish, but that's my base case.
Lyn Alden powerfully compares Bitcoin's network effect to foundational internet protocols like TCP, IP, and Ethernet, or established social networks like Facebook. They are so dominant that it becomes almost impossible to displace them. Bitcoin, as the largest, most liquid, and most secure decentralized network for value, has achieved this self-sustaining network effect.